Saturday, September 20th, 11:55 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Already halfway through the month. Past Wednesday, the Federal Reserve voted and lowered the overnight interest rate to a quarter. 1/4, they reduced it. That being said, going to look at yields from the U.S. Treasury Department. That's another financial exchange for fixed income assets. They affect the U.S. economy, the U.S. market. Some insight: the United States government does not collect enough tax revenue to fund the government. Congress, with the executive branch, spend more money than they take in. So how do we continue funding that? We sell U.S. treasuries, and we have interest rates on those, and that's what we pay. That being said, the United States is only paying interest on its debt. Do you carry a balance on your credit cards? Do you have an auto loan, a vehicle loan, a home loan not paid off yet? Are you paying just the interest, or are you putting in more money on top of that? If you want to go away for a month, do you tell your financial institution, your bank that loaned you the money for your vehicle, or your mortgage company, hey, I'm not going to pay this month because I'm going away on vacation for some reason? What action would they take toward you? What about if you want to go down for 3 months? If you're unemployed and don't want to have savings to pay for that, what would they do? Well, also, this month, deadline, September 30th, Congress must pass balanced budget. Well, the federal government shuts down. Well, I'm going to show you that the Congress, the House side, the leadership currently run by the Republicans, already made an announcement that they're shutting down their offices, but they'll get paid. The last 2 days of this month, they want to go back home and raise money for their campaigns instead of staying in their office to do the job. So, high risk, the government will shut down. Again, degenerate leadership on both sides and the third side. So since the markets are closed, there's treasuries closed, and they again told you past Wednesday, the Federal Reserve lowered the overnight lending by a quarter. The degenerates again in Congress that are spending more money than they take in. This is a 5-year chart, and this is the 30-year yield. Each candle's a week. This past week, closed green, higher high, higher low. Again, the 30-year yield is rising higher again. So we pay more interest to the people that buy the 30-year yield. This is a longer term. This is the 10-year, very correlated to the 10-year mortgage. Don't forget, your mortgage companies add points so they can make profits on top of. Look here, closed green, higher high, higher low. Yep. Since Wednesday, Federal Reserve, I'm sharing this because most people are informed incorrectly by choice from the media and the politicians. The overnight lending, Federal Reserve, a different federal agency than U.S. Treasury. U.S. Treasuries have amount of product they need to sell when they do those auctions. And to encourage people to buy those, they adjust those interest rates to encourage more people to buy if they don't have enough buyers. That's public information. You can see all that. So the 10 and 30 gone higher, as some of us already were situation aware expecting this. The 5-year yield, green, higher high, higher low. Again, we're paying more interest just on the debt. And the 2-year, Green, higher high, higher low. We finally tested. That was last week there. Excuse me. Last week, apologize. Last week, we tested that low from last year. And look at that reversed. So let's take that off. I'll take care of that later on. So now I want to show you. This is the Federal Watch tool. I share this often. Again, the next Federal Reserve meeting is the 29th of October. Right now, speculators are speculating 91% out of 100, 91.9% are speculating. The Fed will reduce overnight lending by another quarter. This could change anytime between now and then, because again, they're speculating. That's October. The last one this year would be 10 December. 78.6 people are speculating they will lower the rates. That too. Some other insight. The Federal Reserve can meet anytime they want. They're called emergency meetings and change rates. They've done that in the past. They had emergency meetings where they changed rates 2 quarters. This is the U.S. debt. Last month, I showed when we made a new record high. We broke $37 trillion, all-time new high. That was last month. Amazing. Since last month, we added another $509 billion on top of the 37. That's huge. Yeah, we're almost at $38 trillion. It's sick. But again, this is just interest we're paying. We're not going to pay off this thing today, tomorrow, but we're letting it get worse. So again, you either print more money, you cut taxes, raise taxes, you sell assets. Yeah. Well, we know they're not cutting spending. Interesting, right? Yeah. Okay, back on this, I want to show you. This is for the month of September, U.S. Treasury Department. We have several, I told you, fixed income products. The 1 month, the 1.5, the 6, the year, 5, 20, okay? So the first day of this month, these were the yields that they sold at. I want to show you Friday, the last day this month. The short-term ones, the 1 month one. See that, 419? So again, beginning of the month, if you bought the 1 month yield, you would have collected a higher yield. First, now it went lower. Understand, the shorter term one is reducing. That discourages people from wanting to buy the short-term one if they're going to earn less. Again, there's a reason for this. Look at the 6 month, beginning of the month was 3.99. Thursday was 381, and it closed 381. Point is, they are lowering the short-term one. Let's go to the 1 year. Beginning of the month, the yield was 382. Thursday was 361, and Friday lower. Discouraging people to want to buy the lower ones. People will still buy them, but if they want to earn more money, they would have to commit, be locked into longer term ones. Let's go to the 5 year one right here. Beginning of the month, 3.74. Thursday, 3.67, and Friday actually went up by 1. Again, the longer duration one. The 10-year one very correlated to mortgages. Beginning of the month, 4.28. Big difference, right? 4.28. And Thursday, 4.11, and Friday, 4.14. They raised it the end of the month. Yeah, it was different there. Again, it's going back up again. And the 20 and 30 year. 20, Thursday was 4.68, Friday, 4.71, and the 30 year, 4.72, 4.75. So again, they closed the end of the week. The shorter term ones went lower, and the longer term ones went higher. Who buys the U.S. Treasuries? Individuals do. Sovereign nations do. Financial institutions do. Hedge funds do. Also, Social Security has a bunch of cash flow and it parks the money buying US treasuries and earns interest. That's a positive thing. It's not just sitting in cash. Yeah. So again, Social Security is not being spent. Regardless, it's being invested and earning interest. And we earn a lot of interest on the Social Security because there's a big amount of money going into that, collecting money. So that helps to fund Social Security if the workforce is larger and if less people are employed paying into Social Security. And that's just basic information. I'm showing you that. Again, most choose not to educate people on. Let's go on to the next. This is the CR bill, public information. Line by line tells you what's in the bill. This is the House side, and they already sent it over to the Senate. And I told you they have till last day of this month to approve this, or the federal government has agencies shut down. Well, the leadership of the House, again, legit. It's not some blogger. It's directly from the government website, the Congress website. September, they've scheduled, this was updated, they scheduled to go away, to go home, to campaign, to raise money for their election. So as of right now, those are the days, the 29th, the 30th, they plan on not being here. I told you, this bill, the House already passed, and they sent it over to the Senate. If the Senate rejects it, they're out of town. If you have a job to do that requires you to be home or at your job, aren't you there performing it? Are you getting paid for it? Again, they're leaving and they're not getting paid. Sorry, they're leaving and they're getting paid. They're leaving and not doing their job, their responsibility. Thank you as always, spending just a little time with me. That's it for the video. Thanks for watching.